fourth, I believe, series of interviews with new funds in the MENA region. It's a privilege and a pleasure to have with us Sherif Nessim, the founder and managing director of Jedar Capital. Sherif has been involved in the tech industry in Egypt for many, many years, since the early beginnings of the internet boom in Egypt, part of Orascom and the different technology subsidiaries that were there. And within the last year has moved to the States. More recently, not just in the last year, but has become first an angel investor, where you did a number of deals, and then now has set up a fund, Jedar Capital. And it's a pleasure to have you with us. We're looking forward to hearing a bit more about you and about Jedar and your plans for the future. Welcome.
Well, thank you. Thank you for having me, Omar.
Sherif, let's start with telling us a little bit about yourself. Tell us about your journey, and after so many years in the corporate world, what made you decide to jump and become a venture capitalist?
Yeah. So maybe I can just start with the background, the beginning of the story. So as you were just saying, I've been working in technology. I'm an engineer. I did electrical engineering. I graduated 1998. And right after graduation, I joined Orascom Group. At that time, they were just in the very beginning of setting up Orascom Telecom. Probably they were just getting the license for Mobinil and so on. I joined a company doing enterprise solutions. So we were not yet, I didn't move into Orascom Telecom or companies of Orascom Telecom. I was doing enterprise solution, mainly voice and data, call center solutions for banks and so on. 7 years later, I joined a company. It was just starting, so it was sort of a startup. I joined probably 2 years later after they started. They started 2003. I joined them 2005. It was a mobile value-added services company, so it was a subsidiary of Orascom Telecom. So basically what we were doing, we were serving the mobile operators that Orascom is establishing in the region. I remember at that time as well, they had operators in Syria, in Jordan, Syriatel, and I think Fastlink before it rebranded or it merged with Zain. Algeria, Tunisia. So our focus.
Alpha Telecom in Lebanon was part of Orascom.
And Alpha Telecom, well. Yeah, exactly. It was a management agreement managed by Orascom as well. So we started and we expanded very fast. We were focusing definitely on the countries where Orascom had an operator there. It made sense. I mean, both our sister companies, Arpo Plus and the telco is owned by the same holding company, Orascom Telecom. So definitely opened doors for us to make more business with the mobile operators. But soon we realized that having the presence in the country, we should expand. We were not just restricted on dealing with the mobile operators owned by Orascom. So we expanded very fast. And we had maybe 15 offices, every single country probably in the Middle East and the Arab world, plus Pakistan, Bangladesh, Italy, and Canada, where Orascom had operations there as well. I had different roles at Arpo Plus. I started with project management, then moved a little bit to product development and product management, operations, technical operations. And then the most recent roles that I had probably the past 5 years before leaving to the States was more focused on business development and commercial roles, as well as partnerships with different partners that we deal with to offer services to the mobile operators. We also did a lot the past 5 years in the financial mobile payments and mobile transactions, financial transaction side of the business, which is personally, I had a genuine interest in it, comparing it to the other vast sides. We did, of course, as well, a lot of entertainment business. This is a big majority of the vast business. Mainly music, video on demand platforms and music streaming platforms and services around music mainly.
Basically, VAS was the telecom operator's response to apps, but before apps, actually, right?
Exactly.
This was the way that telecom operators were going to make money. And then apps came and disrupted this whole business massively.
Yeah. It did. And actually, it reflected on the ARPU. And I think this is probably part of the story why Orascom as well decided to exit the mobile carrier business, and they sold all the assets in 2013, I think, to a Russian group called Vimpelcom, and this was the time of probably the transformation personally into the VC and the investments, and it was, I have to say, it was a little bit like destiny or lucky strike, I would say. When Orascom sold or exited the mobile telco business, they decided to reorganize and restructure the business. Arpo Plus was one of the companies that are non-telco. We're not a mobile operator. We just serve the mobile operators, as long as the other sister companies that we had, Connect Ads, Link Development, other companies. So they gathered all this company under a new holding. At that time, it was OT Ventures. And then in 2015, they did another transformation, and they said we're transforming into a VC fund. So and they rebranded again from OT Ventures to A15, which is A15 VC fund that is existing now. And this was the beginning. We were invited. They invited the early employees, and they said, if you want to join as an LP in the fund, you're welcome to do so. I got excited. I like the idea. I mean, I'm working in Arpo Plus. I am one of the very early employees. At that time, I had impact, definitely, because I was part of the management team and pushing things and setting products to launch in different markets. We were expanding into Africa and so on. So I was excited that with the ability that, I mean, being invested in a fund that owns the company that you are active in, this, it's a different combination. It's rare for me, but I was lucky that I had this experience, because being an LP in a fund where the people, they know you've been working together since 2005, it gave me the opportunity to have like the feel of what VC means, what does it look like, how they do the investments. This was the beginning when as I started getting involved into the ecosystem, not just A15, but I reached out to other startups. If they fall within what A15 is looking for, I would make like the introduction, or let's say the deal sourcing for them, and introduce them to the company, and then they take it from there. I was not part of the investment committee, but I was a little bit trying to be active and checking the scene and how things are working in the region as well.
So how did you make finally the leap into venture, your own fund?
It was a gradual move, I think. At that time, I started to get very attached to the ecosystem of the startups. So I started networking with other startups, accelerators, incubators, other VCs, attending a lot of events around the startup scene. I participated in few panels as a judge in few startups. So I had this attachment to the industry.
You got the bug.
Exactly. The bug hit me. And I knew that probably this is something maybe down the road. I've been working for 20 plus years in the technology as an operator. So maybe shifting to technology, I mean, remaining technology, but shifting from the investment side, I started to feel this is a thing I want to do, especially that I was always into the financial modeling and analysis. I like number. I like taking decisions with numbers. I put everything in an Excel sheet, and then I start the thinking process and take the decision. So
I love this. My team is listening and thinking this sounds like Omar too. I wanted to ask you, actually, tell us a little bit more about the fund. what are you focusing on? What's your thesis? What kind of geographies? What kind of deal sizes? And also what sectors? And I know everyone says, we're sector agnostic. There's not enough deals, but already it sounds like you like fintech. It's a hot space.
Yes.
Everyone has some spaces that they think are too much overdone, some spaces that they're bullish on, some spaces that they're bearish on.
Yeah.
So if you can give us a bit about the thesis of the fund and the types of deals that you're looking for, that would be wonderful.
Yeah. Let me start with the geography, because when I moved to the States, I wanted to start doing I joined a program, an educational program. It's called Going VC, which is essentially, it's for aspiring VCs. So people who either they're working as juniors in the VC world and they want to scale up, or they're from outside the VC world. And this program helps to tap into the VC. And at that time, I wasn't sure. I had this target or objective in the back of my mind. I don't want to join a VC firm. I want to start my own VC fund. So I spent some time thinking, what's the value, especially if I'm in US. What's the value, for an emerging VC fund manager who's doing it for the first time, and he has no experience in the US market. Essentially, I know about the market from the international news. I follow up what's going on, the startups that is evolving in the States and so on. But in terms of the network and the knowledge and everything, it's not really the value that I can bring to the LPs and the investors that will invest in the fund. So I decided, that probably in terms of geography, I want to focus on the region where I come from, where I have worked at, where I have the relations and the network, where I'm very close to, I would say, the pulse of the startups, the pulse of the problems, the pulse of even the challenges and issues that can face the startups and make them either fail or succeed. So I wanted to set my thesis around a geography, even more than a sector. My thesis was more into that this is a region that will definitely be lagging in terms of adopting a lot of technologies. And in a lot of cases, most of the startups, they will not be inventing new, I would say, business models or anything. But people are the same. The people that are living in the Middle East, they deserve the same services that maybe people in the Western world, in US or in Europe, they're having. So essentially, I know that probably we will see in the region a lot of deployments, a lot of startups actually transferring proven business models and proven startups ideas that it's only about localizing them and making them fitting for our market, along with a lot of stuff. The regulatory framework, the demographics of the country, the social level, the economical level, everything. So that's why I know it's a bit cliche, but that's why I'm a little bit sector agnostic, but I focus more on the services.
I anticipated that sector agnostic one. I tried to throw it out before you did.
I know. But it's not really agnostic. There are some areas that I shy away from.
There you go. Tell us about those.
The biotech, medtech. The complex. I like definitely health tech, but I don't go to the deep technology in biotech and pharma and complicated medical devices and so on. Usually, I like to try to understand the industry, and then I don't find it difficult to see how technology is serving this industry. So I don't think I will be able to figure out the details of biotech and it needs a little bit of specialization, I think. So mainly, I like, as you said, fintech, financial services, insurance services, all the services around the financial transaction services, marketplaces that have smart business models. Logistics and supply chain is something I started to get very much deep into, and I like it a lot. So so if you want to name like 3 or 4 verticals, probably these are the 4 that I like.
So give us 1 or 2 sectors that you don't like.
Traditional e-commerce.
Okay.
I think we had too much of that, and I think it's starting to be very crowded market, and in a lot of cases you don't see really the differentiator or the value. A lot of stores selling everything, but yeah. I can't recall another one as well, but yeah, probably, yeah, as I said, biotech and complex stuff, it's not that I don't like, but I don't get into, because yeah, I like to understand what I'm investing in.
And it makes a lot of sense. I think that, you know, that's why some of the funds that are doing such really specialized work have like PhDs in these technologies. And this is, I think, one of the things about the internet sector as a whole. It's the verticalization and the specialization in the sector.
Yeah, and 10 years ago, now more and more of the thematic funds actually they focus on purely biotech, purely fintech funds, and so on, which is makes sense, of course.
And it's the transformation of industry. And I say that I expect to see more and more mid-career professional founders coming out of 10, 15 years working in an industry with relationships and specific knowledge that they can use to tackle the challenges of that industry, be it healthcare, financial services, or others. So, and I think this is a wave that we should expect to see in the future. But I want to switch gears a little bit with you, Sherif. I want to ask a couple of kind of light, fun questions, and you know, get your thoughts on them. They're mostly like, give us your top or your most, so it allows you to answer quickly. Okay. And we're going to try to keep them 30 seconds to 1 minute. Okay. So first question. What is the #1 challenge that you think entrepreneurs underestimate as they're building their companies?
The growth, I think.
So the pace of it, or the difficulty of growth?
No, the difficulty of growth. They need to do a lot of A/B testing and trials and tests, and it's a long process. This is what I've seen. I mean, it's not a thing that, it's not about advertising and marketing and that's it. It's a complex thing, and it's very important, because essentially, especially at the very beginning, you need to show decent growth month over month. And when you're just starting, you do a lot of pivoting and testing. So it's the mix of both that I think is a challenge that they aren't underestimate.
Great. And I think that's super clear. Figuring out the formula. It is not if you build it, they will come. You have to figure out what's going to get them to come and what's going to get them to come scale.
And stay as well. And stay. Yeah. You need to look at the churn as well.
Great. Tell us about do you think is the biggest challenge facing the regional startup ecosystem in MENA today? And I'll give you a couple of options, or you can answer a totally different one. Talent, funding, regulation, market size or access to customers, culture, or any others.
No, I think talent. Because most of the others are actually getting better. They're improving year over year in terms of funding, in terms of regulations. We have seen a lot of countries now are, especially in the financial sector, the banking sector and so on, they're issuing, like, they're moving from being like the bureaucratic elephant regulator to a young one that they look at what's going on out abroad, and they're trying to introduce like open API banking, online bankings, and so on. So I think out of the many problems, I think the talent will remain the biggest problem.
And is there something specific about the talent, specific areas that you think talent is lacking?
I think there are two. I think education is one of them. So on the university level or the higher educational level, I think there should be like a connection between the real life and the practical life and what students are learning, to get them, I mean, to make them more ready when they graduate into the market. And yeah, I think this is mainly about the talent. Maybe the other part is people traveling and leaving the country and find opportunities abroad, whether in Europe or maybe they immigrate to other countries.
Yes, unfortunately, I think we're experiencing a lot of that in Lebanon today. So, I think I'm totally with your point. I think there is a need for programs that bridge that gap between what employers really need and the students that universities are graduating.
Very true. Very true.
Tell us about what is a common mistake that entrepreneurs often make when approaching investors.
They are a little bit hesitant in terms of what they want.
So they don't ask boldly enough.
They don't ask boldly enough, and sometimes they ask a very wide range. I will give you just an example. A company said that, yeah, we need somewhere between 500K and 2 million. So, but again, why? Why do you need this amount of money? And you need to be very precise when you're raising. Again, this is especially the very first rounds. This is very expensive money for you. I mean, this is the first dilution that will hit you, and you cannot. And again, the valuation is still low. So I mean, shooting for big or a big range when you don't know exactly how are you spending this money, in what aspect, in what direction, will it really take you to the next step? Is this the really amount of money you need to go to the next KPI or the next milestone or not? So this is a big mistake. I think they should spend a lot of time on defining exactly the right amount they need and be precise on how they're spending it, and what KPIs or milestones that we can, as an investor as well, we can look at maybe 9 months, 12 months after this round to make sure that they're ready as well to the following round as well.
Great, and very good advice for the entrepreneurs. Another question. What is one thing that would make you immediately dismiss an entrepreneur? Like a big no-no, red line crossed?
No, I mean, lying. When they say things and I find out in the end that it's not true, they're lying, or
that's a pretty bad one. I would say definitely that is a bad one. Okay, tell us about a company, a regional company in the early stage or Series A that our audience may not know much about, but that you think is a unicorn in the making. And you can pick one really regionally or globally, but tell us, the interesting thing that I'd love to hear from you here is, why do you think this company is a unicorn? What trend are they riding on that you think is going to be a big next trend?
I think I will pick a company in Nigeria. So beautiful. Yeah, it's a startup. It's called Mono, and actually they're doing a very simple thing. They're enabling getting APIs from all of the banks in Africa and try to avail it to different startups to use it.
It's so like a middleware, essentially.
It's a middleware. They're like Plaid in US, which is essentially the gateway between any application and the bank. So you just put your username and password, for example, and then you connect. The application can pull whatever data is available in this API set. So I think they're an enabler for a lot of businesses. For lending, I think they will be a huge and very important enabler. For financial transactions, for what is called now embedded finance. In most of the application, even if they're not doing real fintech, it can be logistics, it can be e-commerce, it can be anything. But now they're all adding like a layer, an embedded layer of embedded finance.
So you want to go, you're shopping for something, and you can get the financing to buy the thing from the website, and that service is delivered by another startup.
Exactly. It can work with individuals as well as businesses as well. a logistics or a retail or distribution company that is working with the SMEs, once they connect to their account, they pull some data, they can on the spot underwrite them, give them credit approval, do a lot of things. So the company is not essentially a fintech company. They're doing distribution or helping them distribute their goods and so on. But they added this layer, the embedded layer of fintech or financial services. And to do that, they need an enabler because they cannot leave their core and go to connect to the banks or to credit bureaus or whatever to get some data. So they connect to companies like Mono, and then they offer different services. And Mono, they're very aggressive. They're started in Nigeria, and they have plans to cover. Their plans is to cover the whole of Africa.
Amazing.
So connect to every bank in Africa, in every country, and then avail these APIs to the different use cases and different services and different startups.
I love it. I think
this is a unicorn in the making.
Wonderful. And I like two things about it. One, the platform that is helping digitize large enterprise and open up innovation to large enterprise. And the second one is this concept of embedded finance, which I think is really powerful trend that we're seeing. So thank you. Great answers. And I see there are some questions from our audience. I have one more question, rapid question, and then I'm going to turn to the audience questions.
Sure.
And if there's other audience members who'd like to ask, please add your questions in the Q&A and we're going to come to them. My last question is really, tell us about a time that you invested in something and lost money and what you learned.
It will happen. It didn't happen yet because I'm relatively young in terms of the investment. Most of the investments actually are done mid-2020, so less than a year. So I think I still, but I'm ready for this because I know this is how you learn, and this is how you cannot get into the VC world and claim that you will invest in 20 successful companies. There definitely had to be, and this is how I will learn. So I'm expecting it.
Okay, great. Well, we look forward to hearing about your spectacular successes and your failures filled with lessons learned. I'm going to take some questions from our audience, and actually I might tie these questions together because they're related. So the first question is regarding a fintech startup. What is the ARR needed to achieve before the startup can raise pre-seed or seed or series A? And maybe the same person to ask, within the MENA region, what is a fair valuation for a fintech startup within pre-seed and seed? Now, I know that these are super wide-ranging topics, but maybe you could give us an indicator of the type of ARR required for a certain type of valuation or phase. I think that's kind of if I'm going out to raise a Series B for $10-15 million, what kind of ARR should I have? If I'm going out to raise 5, what kind of ARR should I have? And any insight that you could share on that would be great.
Yeah, sure. Again, it depends because, for example, for some funds, if they're entering very early on and they're doing a pre-seed round, the company can be actually a pre-revenue company. But if you're talking about a company that is doing a specific ARR, it depends on the round as well. I think for the seed and probably pre-series A, I would say 500K to 1 million. That's reasonable. Again, I'm tying this to probably the valuation or the potential valuation. Again, I tied a little bit to the ARR.
Perfect. And so today we're talking about a Series A company doing 500 to 1 million in ARR. What kind of valuation are those guys expecting?
It depends on the industry again. If you want to tie it to the multiples for the revenues, again, can vary widely. I mean, from 5 to 6 times up to 20, 30 times sometimes, I mean, in some cases in some industries. So it depends on the industry. I mean,
the industry here they've specified is fintech. I don't know if that
fintech. Yeah. I would say somewhere around 5 to 10
Great. So $5 to $10 million valuation for a $500 to $1 million ARR. So we're talking about a 10 times revenue multiple.
Of course, there are other parameters, but we're trying just to give a
This is great. This is more than I thought you'd give me.
There is the month-over-month growth. There is the forecast. We need to look at the market and so on. But this is like just rule of thumb, let's say.
Beautiful, wonderful, wonderful. We have another question from Baha, who says, "What's your plan around augmented reality? Or are you interested? Tell us your thoughts about augmented reality and its potential."
I still skeptic a little bit on a business model, on viable business models. For the time being, I see it like empowering the brands, doing stuff like that. But I didn't see yet augmented reality outside of the gaming and the entertainment industry that have like a huge potential for revenues.
Okay, great. I'm not sure about he was asking about supermarket and artificial intelligence. Sorry, our augmented reality with supermarkets.
Yeah, again, I mean that's exactly what I'm saying. So for example, if we have like a grocery store online, for example, with and without the augmented reality, that's my reason of being a little bit skeptic. What's the added value of the augmented reality? So it again, it depends on the startup, on the model, how you're employing augmented reality into this thing. Having a supermarket, as the question is asking about, having a supermarket, you don't have the augmented reality, people will shop. Definitely adding this, for me, I see it as a nice to have, but will it impact directly the revenues significantly to say that, AR here is adding core value to e-commerce or grocery e-commerce or supermarket business or not? It's about the implementation. What is it adding to the business?
What's the use case and what's the real value add for the customer perspective and even for the experience of the person who's buying in this supermarket? Sherif, I want to ask you a question. When we look at the region today, and this is going to be one of my last questions really, we see that Egypt is one of the more underserved markets from a venture capital perspective. I think there may be as many VC funds in Lebanon, which has a population of 6-7 million people, as there are in Egypt, which has a population of 100 million people. And so I'm wondering, why do you think that Egypt remains such an underserved opportunity from a venture capital perspective?
I think first, I think recently this has started to change a little bit. So for the past, I think, year or two, Egypt, where I think was like number one or number two in terms of countries in the Middle East, that in terms of number of deals as well as the size of deals as well. But again, this is my personal opinion. I think maybe because of the regulations, we had rigid regulations for the past years. This has started to change, but before that, I think this was a little bit stopping or hindering investors to come and invest in companies that much in Egypt. Now with the new regulations, the opening up the business environment, there are a lot of things that are going there. I mean, the health insurance coverage, the national health insurance coverage program, I think this will create opportunities as well, especially if the government said that we need to create an ecosystem. We'll not play on this ecosystem alone. We will open it up for the private sector or the startups, where we will start seeing startups and investors' appetite will definitely look at the sector once they're open. Startups simple as the electronic health records, for example. It doesn't have to be a sophisticated thing, but electronic health record is a main ingredient in any health insurance, national health insurance program as well. So I think the regulations was one of the factors that caused this to be, I mean, Egypt to be a little bit underserved in terms of investments coming into the country.
Very interesting. And I think today, that's one of the things I also think is slowing down regional scaling of companies, the lack of regulatory harmonization. Once you set up in one country, you have a whole new regulatory headache to touch on when you move to the next. I'm going to take my last question actually from the audience, because I like this question and I'm going to also expand on it. The question here is, what are your views on revenue share investment models? And I'm going to actually make it a bit broader. What are your views on non-cash more broadly, or non-traditional investment models? We've seen we've seen equity for advertising models in the region that has been part of some very successful startup growth plans. You could see, I've seen support and services in exchange for equity. We've seen all sorts of interesting models. What do you think of these non-traditional models? What would you advise entrepreneurs about them?
It depends on the type of the partnership. If you see that this is a very, very core thing to your startup that will probably continue as you grow, it's not something that you need for the very beginning or early on when you're just kicking off your startup. If you think this is a long-term benefit and a long-term partnership, I don't see a problem in that. I think it's like selecting a strategic partner and getting into a joint venture. Not necessarily a 50-50 joint venture, but I mean, you're selecting a strategic partner that you're sure that you need them, they will add value on the life cycle of the company, not just a certain phase, and then you'll find you have an investor there or part of owner of the company that is not bringing any value anymore.
And beyond the relationship and trust and character of the party that you're collaborating with, are there ways that you can protect yourself or somehow ensure that you get some of that in-kind support that you're looking for?
They always have to consult legal firms, I think, when it comes to such the in-kind, I would say the in-kind contributions or sweat equity or whatever they call it. I think it needs to be revised by a very experienced legal entity, just to make sure that you're protecting your rights and you're getting what you were promised in return of this equity that you're giving up.
Great. And I think also that makes a lot of sense what you're saying, that it has to be core to your business and a partner that's going to deliver value over the long term, because they're going to be your partner like getting married, like they say about
lifetime partner,
right? Getting in bed with an investor. Sherif, thank you so much. A great, fun interview. And thank you for sharing your insights, telling us about Jedar and your background. And we know that you've only been investing now for a little bit less than a year, but we wish you the best of luck. We look forward to hearing great success stories and keeping in touch. And thank you to our audience. We'll look forward to catching up with you again Monday, same time, same place, for our next in the Ramadan series with new VCs. Thank you, Sherif, and have a good night.
Thank you very much. Thank you for having me over.